Now, some more bullish news for Ethereum, because Ethereum, and I like Ethereum. I very much do. Uh, it's been a little stagnant, right? And there's a lot of opinion that Ethereum has been stagnant because of the scalability issues right now, which is effectively just the gas fees. But as many people have already articulated, the interesting thing to note about Ethereum is that even despite the gas fees, because they are high, volume keeps increasing. More and more people are still using the protocol, and typically that's a market signal that the market participants are that highly incentivized based on the value they're getting by using Ethereum and the protocols, the DEXs, the liquidity on top of it, that they're cool paying the fee. Now, is everybody paying the fee? No. Will there be more market participants if the fee was lower? Almost certainly. But it's a good sign that activity hasn't just dried up entirely as a result of the fees. Okay, so Staked ETH Trust opens Ethereum staking to accredited investors. The Staked ETH Trust seeks to simplify the staking process for accredited investors and other institutions. Now, Staked is a blockchain infrastructure company and investment manager, providing institutional investors with a new vehicle in which to invest in Ether and earn staking rewards on the Ethereum 2 beacon chain. Now, the return for staking ETH is expected to be up to 8%, and the trust allows investors to gain direct exposure to ETH and earn staking rewards on their holdings. Tim Ogilvy, CEO of Staked, said the ability to earn staking rewards is one of the biggest draws of cryptocurrency investing. However, outside of early adopters and crypto enthusiasts, the staking process isn't intuitive to most investors. For institutions, it requires special custody arrangements, a high degree of technical expertise, and the patience to keep their assets locked in smart contracts indefinitely. As the appeal of owning cryptocurrency grows, so too does the desire to earn staking rewards. With the Staked ETH 2.0 Trust, we're dramatically lowering the barriers to entry for more traditional investors. We believe that when staking is made easy for a larger pool of capital, the levels of participation will grow significantly. All right? Now, I wholeheartedly agree with that. I was looking significantly at staking Ethereum, and when I looked at how long it had to be staked, basically point being, there are a lot of different ways to stake your Ethereum now without actually directly staking the full 32 minimum ETH required to run a direct stake on the beacon chain. You have products like this that are coming along that are designed for institutional investors who just want to expose themselves to the upside but don't want to really deal with any of the technical stuff on their own. And you have other protocols and platforms like Rocket Pool and Pool Together, which will allow you to basically join your Ethereum. So even if you have less than 32 ETH, it allows you to pool your funds with other users, and then it is staked together, and then you're paid out your portion of that stake reward, and you don't have to lock it up for the 2-year vesting period or whatever the period is for the direct staking with ETH 2.0. So this is good news because it's showing that there are businesses, there are organizations, there are firms coming into the marketplace and developing products to make sure that institutional accredited investors, the people who aren't the super hardcore niche individuals, the early adopters, they're making sure that the broader market, the more average investor, understands that there are so many different ways they can invest their money and their capital to see significant return within the cryptocurrency and blockchain ecosystem. So this is great news.